So I'm wondering, have you ever heard of anything like that before when it comes to, capital gains tax exit planning and having that kind of flexibility?
I've heard of some things like that before, but specifically to get ready for an exit, I haven't explored that actually too much. And like I said, I'm ready for my exit, so I think that's a good way to do it. So you're saying that you have to actually set up that trust ahead of time. And is there some kind of waiting period? So like, let's say I'm in talks and I'm about to receive an LOI. So I want to just make sure that that whole setup is done and the transfer is made before getting the LOI. And then from there on, we can just move forward.
So our favorite answer is it all depends, but what we like to typically do is just give you option language during the LOI stage. So it just has an option for you to explore it. No cost, no obligation to use our services. But did you go down the road? Because these sales can take, 90, 180 days. They can take a year to close some of these larger transactions for M&A, big business sales. And so the cool part is we work in the background alongside of the M&A attorneys and the advisors and all that, but we give you the option language up front so that the buyer doesn't seem like they're going to do you a favor at the end of the deal. And so, and then we can also build everything up. But technically the IRS, they want to make sure that you're doing planning before what's called constructive receipt. Constructive receipt basically means that there's a binding commitment from the buyer and seller, which means the deal is basically a done deal. LOI stage, they're still doing due diligence, even APA or PSA or SPA, which is basically a purchase agreement that's in contract. Even during those times, there's still time. But on the best case scenarios is we meet with folks like yourself while they're, 30, 60, 90 days away from some kind of transaction or some kind of contract. And then we give them option language to explore it. And that's basically it. And then we actually build the trust during the transaction, right, before it closes. And then you can assign your interest. And if it's depending if it's a stock sale versus an asset sale, there's some different nuances there. But ultimately, smoke clears. Whatever you sold, instead of having to pay immediately 20, 30, 40, sometimes 50% of the gains, right, in tax, you get to defer all of that, and then you literally can go on past your kids. You can just keep compounding it. I mean, it sells itself because it's just a mathematical equation, right? To be honest,